One of my newest additions to my stock market portfolio, the mobile gaming company Zynga, just got acquired by Take-Two Interactive, and the stock proceeded to skyrocket by over 40% in a single day off of that news. Well, in today's video, I'm going to quickly explain what exactly happened here, why Take-Two is acquiring Zynga, and I'm also going to explain why I am personally not selling out of my Zynga position despite the huge run up. It's going to be a fun one. Let's jump into it. What's up, everyone? My name is Ale. Welcome back to my world of stocks. So what exactly happened here? Well, what's crazy is that I actually made a video. I put out a video on Monday morning. By the way, I'm recording this Monday night. It'll probably get edited and uploaded on Tuesday, hopefully Tuesday morning. But what happened was I released a video on Monday morning talking about some of my favorite video game related stocks for the long term. If you want to watch that video, I'll link it for you down below. But there were 6 stocks in total that I talked about, and one of them was Zynga. This is a mobile gaming company that I've believed in here for a while now. I've been buying it since last year. It's a new addition to my portfolio. The stock had been crashing by a huge amount, and I said, hey, this is a good company. The stock price has fallen too much, and so I started to buy it in hopes that it would recover and start to take off again. Well, in that video that I put out Monday morning, I mentioned the fact I basically said, don't be surprised if a larger company comes around and acquires the smaller company Zynga just to get more exposure to the mobile gaming market. And the reason why I had that prediction was because Zynga is a very good company. Like I said, the stock had been falling, and we've already seen many other gaming companies, larger ones, acquire smaller ones. Recently, we had Microsoft acquire like 26 different game studios. We've had Electronic Arts acquire Glue Mobile, which is a smaller mobile gaming company. We've had Tencent acquire Supercell, who is the developer of Clash of Clans. So we've already seen similar things happen. So I said, hey, don't be surprised if this also happens to Zynga. This is a really good company, has a ton of really popular games like Words with Friends, Draw Something. I actually play some of those games myself. They're even developing a Star Wars game for the Nintendo Switch. So this is a very well-established gaming company, and especially in mobile. Don't be surprised if a larger gaming company comes around and picks them up while the stock price is falling. And so I put out that video Monday morning, and then later on in the day, I get a notification on my phone from Robinhood saying Zynga stock is up over 40% in a day. And I'm like, what? Like, what the heck happened? So I go onto my phone, I go onto Robinhood, I look for any kind of news updates, and sure enough, there's a news update there that says Take-Two Interactive is acquiring Zynga. And I'm like, dang, that's crazy. I just talked about that in the video, and it actually ended up happening. Again, I would say that it's not a very difficult prediction to make just because we've seen very similar things happen recently. But let's dig a little deeper here. Let's talk about why they're making this move. I personally think that the move makes a lot of sense. But I also want to talk about why I do not plan to sell my Zynga shares, despite the fact that it's climbed by so much now. But let's dig a little deeper here and let's see what happened. Okay, so the deal is expected to close for close to $13 billion. Definitely making it, I think this is like the largest acquisition in the gaming industry, at least that we've seen in a very long time. For example, Electronic Arts, when they acquired Glue, that was for around $2 billion. Then you had Tencent acquire Supercell, that was for about $9 billion. But this is even more expensive than both of those acquisitions combined. And as CNBC reports, it was also a 64% premium on the share price of Zynga, bringing it up to $9.86 a share. I'll show you the updated share prices here in a second and how Wall Street reacted to it, but it actually sent Take-Two stock lower. And they mentioned here too that this is just another major acquisition in a long line of recent deals in the video game industry, like I mentioned before. Anyway, looking at those prices, again, I'm recording this Monday night. I'll be uploading sometime Tuesday. Make sure you check for any updated changes to the prices. But as of right now, Zynga's stock ticker symbol ZNGA, closed for the day 40% higher than where it opened. And what's funny is that despite that, the stock price is still in the bottom half of their 52-week range. So Take Two is still getting a cheaper price than where the stock was trading just about a year ago when it was trading for over $12 a share. That's because it's been crashing for a while now as investors feared that mobile gaming is going to slow down as we recover from the global health issue and there are less lockdowns and more people starting to go outside and spend less time on their phone. And so because of that crash, even after the 40% climb today, the stock is still down over 30% from its highs last year. Again, that's even after the 40% climb today. That's pretty crazy. So you could definitely make the argument that Take Two is doing the smart thing here. They saw the stock crashing hard and they said, hey, let's get in there. Let's buy the stock now while it's down, which by the way is exactly what I've been doing myself. I started buying the stock for the first time after it had crashed, and now they're getting a fantastic price for what I feel is a great company. Well, I should clarify that's in my opinion because Wall Street seems to think that this is actually a bad deal for Take Two because they actually sold out of that stock today, causing it to crash by almost 13%, which now leaves the Take Two price right near the bottom of its 52-week range, down over 30% from its highs. About the acquisition though, Take Two is doing this to get larger exposure to the high growth mobile side of gaming that has already overtaken more than half of the entire gaming market. And Take Two believes that the acquisition will lead to over $100 million in cost synergies within the first 2 years of closing and raise the number of mobile games and services that they sell from just 12% of their business to a massive over 50% by the next fiscal year. That's pretty crazy. And you have to keep in mind, Take Two has always been one of those companies with a very long-term mindset. I mean, they're famous for very long-term kind of popular games like Grand Theft Auto, NBA 2K, things like that. I mean, their best-selling video game franchise is Grand Theft Auto, which has sold for over 350 million units, making it the fifth best-selling game franchise in history. And yet Take Two always takes their sweet time to release new versions of it because they always think about the long term and they just try to make the best possible version of it that they can, and then they sell it for as long as possible and even make money off of updates like on GTA Online, which is a more kind of a like recurring service type of thing. In fact, the last official version of GTA was GTA 5 and it was released almost a decade ago, yet it continues to make them unbelievable amounts of money. And this is all exactly what Take-Two CEO talked about in an interview about the acquisition, pointing to this being a necessary move that will help them continue to bring long-term success for the company and its shareholders. And yeah, I mostly agree with him. Take-Two has been struggling with revenue growth over the past few years, dropping from 15% growth in 2019 to 10% in 2020 to just 3% in 2021. Now, granted, those growth rates can have a big jump whenever a hit title is released, but adding a mobile game developer like Zynga, who tends to release more new titles more frequently, that may help stabilize their financials a bit more as they get more diversified, especially with their revenue growth. Because over the same time period, Zynga has seen much higher growth of close to 50% in each of those years. Plus, you have to figure that Zynga will help them develop mobile versions of their already existing large games. For example, you have Midnight Club. Take Two actually just mentioned Midnight Club recently. That is a racing game, and Zynga actually makes their own racing game called, I believe it's CSR Racing, and I think it's been downloaded like, I don't know, like hundreds of millions of times. So it's a very popular racing game. Well, Zynga can go in now and make a mobile version of Midnight Club for Take Two. They can also make mobile versions of, other things, Grand Theft Auto, Red Dead, NBA 2K. They can do all kinds of different things for them and help them get more mobile versions of their big titles, which is actually something that well-known game analyst Michael Pachter from Wedbush Securities pointed to as well, who he thinks that this is a good acquisition for Take-Two since he already had a bullish price target for Zynga at $15 a share, which is way higher than the less than $10 a share that Take-Two is paying. Speaking of which, Take-Two will pay for the acquisition using a combination of cash and stock. They will give existing Zynga shareholders $3.50 in cash and another $6.36 in Take-Two stock for each share of Zynga, totaling close to $10 per share when it's all kind of said and done. And it's expected to close, the deal is expected to close around the midpoint of this year if it gets approved by regulators and shareholders, which it probably will. I don't see a reason why regulators would stop an acquisition like this. It is, don't get me wrong, it is a very large acquisition, the biggest one that we've seen lately in gaming. But I still don't think that regulators are going to deny it. It still doesn't seem anything too incredibly massive to where they'd have to step in. And I also don't see any reason why shareholders wouldn't approve of it either. I do feel that this benefits really all parties involved. So I do think the deal will get done. However, there is always going to be that small risk that for some reason the deal falls through, and that is why you're seeing Zynga stock trading for about $1 less than the acquisition price, just because there is always going to be that small risk that maybe the deal does not go through. And so that's why the stock isn't going to trade at the actual acquisition price until you get closer to that actual acquisition date and the deal actually goes through. However, that leads me to the last thing that I want to talk about here today, and that is, should I sell out of my position now that the stock has climbed by so much in such a short amount of time? Well, my answer is no. I am not selling out of my Zynga position, and I have two very clear reasons why. Number one is taxes, and a lot of you guys watching, stock market videos here, you're watching a stock market YouTube channel, you're probably aware of the fact that if you hold on to a stock longer than a year, you get taxed less on it. And as I mentioned before, Zynga is a brand new addition to my portfolio, so I've made a lot of purchases on it within the past year. It has not been a full year yet, so I would get taxed more if I sell it early. So I'd like to actually hold it for about a year to get those lower taxes. But that also leads me to reason number two, which is that, because you might be asking, well, what if the stock price goes down during that time? Maybe you should just cash out now and just make sure that you lock in some profits. Well, reason number two that I don't want to sell out is because I actually had higher expectations for Zynga to begin with. Take-Two is going to acquire them for less than $10. Well, I agree with someone like Michael Pachter, who had a $15 price target on Zynga. I was buying Zynga stock after it had crashed. My cost basis is around $6 a share, something like that. Right now I'm up I think I'm up like over 30% on my position. Not quite 40% because I was already down a little bit after or before it had climbed. So yeah, it climbed over 40% in a day, but my position is up closer to 30%. Anyway, 30% is still a huge amount to be up in a single day. Of course, I'd like to lock in some of those profits, but I was buying Zynga stock after it had crashed. I had about a $6 price target around in the $6 range, and I was thinking, hey, I could probably double my money on this one. So I was going to hold it a little bit longer term, and I was going to wait for Zynga stock to really go back up. It had traded above $12 before, and I did expect it to return to those levels at some point in the future. I don't know when that it would be, but I had that expectation over the longer term. So I want to at least get that acquisition price that Take-Two is paying. Again, I think Take-Two is getting a good deal here. So I want to get at least what they're willing to pay. So I'm going to hold through the acquisition. And if anything happens, even if the acquisition falls through and it doesn't go through, I don't really care because I was buying Zynga stock before the acquisition and I had a higher price target to begin with. So what do I care if the deal doesn't go through? I still have the same expectations for Zynga. Nothing has changed just because Take-Two is taking over. If anything, I think maybe it improves certain things. I don't necessarily know that I want to have Take-Two stock either. I don't know. I'd have to reevaluate at that time. But what I know for sure is that I at least want to get that acquisition price, at the very least. And I should be really getting more than that. So I'm going to hold through the acquisition. If the acquisition does not go through, I could not care less. I'm still going to hold Zynga stock longer term if it doesn't go through, and I'll still have high expectations for it. But if the deal goes through, great, that's fine. Give me that acquisition price and let me at least get those profits and let me get the lower tax rates on it. So those are my thoughts. I hope that makes sense. Let me know if anything is confusing. Just drop a comment or question down below and I'll try to respond to you guys when I get a chance. But thank you for watching. Hope you all enjoyed the video. If any of you are invested in Zynga, let me know down below. How do you feel about all of this? Are you invested in Take-Two? How do you feel about that? Love to hear your thoughts and we'll go from there. We'll have some chats. It'll be a lot of fun. Anyway, thank you for stopping by. I'll see you in the next video. Take care. Bye-bye.